Hey guys, good afternoon. This is Christina.Brooks, and I brought on our mortgage expert, Rodney Garrett with Prosperity Mortgage with me today, because there's been a lot of misunderstandings about forbearance and what that means for you in your mortgage. If that's something that you're needing at this time, it's a great program that has come out to help. So Rodney, I know you and I have been talking a little bit back and forth about what some of those are, but can you explain to us, like, how does one qualify for forbearance, or what steps do they take to do that?
Sure, I'll be happy to. The thing to remember is forbearance is not new. Forbearance has been something that's been available and offered to clients through the years, clients that found themselves in a financial tight spot. The difference now is that the forbearance that all the companies are offering or being told they must offer is no questions asked. If a client calls up and says, hey, I need forbearance 2, 3, 4, 6 months, then they have to grant them that forbearance. And so they don't have to make a payment for that period of time.
When you say no questions asked, like they don't have to provide all these documents or proof that they got laid off or any of this kind of stuff, or does it depend from lender to lender?
Right or wrong, at this given moment, forbearance requires no documentation, no proof. They simply request it.
Okay.
They qualify for forbearance and can skip some payments to help them through the period of time they need the help with. Yeah.
Okay, so one thing that you and I discovered in conversation today was qualifying for the forbearance may be the easy step.
Sure.
Qualifying for the repayment or non-repayment or adding it to the end of your loan, for example,
it's different. Yes,
it's totally different. So maybe we can dive into that a little
sure.
bit. I think that's
sure.
a lot of the
Sure.
how does that handled?
Yeah, if you read just the first sentence or two in the paragraph about forbearance, you could come away with thinking that you have to pay the shortage back as soon as you go back to making payments.
Mm-hmm.
Meaning if you skip 4 payments, when it comes time to make that 5th payment, you have to pay all 5 of them.
Right.
That's not necessarily the case.
Okay.
Now, although forbearance has no questions asked, you can get it just for asking. Repayment, you do have to qualify for. Meaning, if you have the means to make your regular payment and a little extra, you may have to. If you have the means, the ability to pay those 4 months you skipped back all at one time, you may have to. But if you're like many folks, many of our friends and family that we've worked with through the years, and you can't make that extra payment, that it's just, you can't do it, well, then you can qualify to have that put off to the end of your mortgage. It's just tacked on to the end of the loan. And when you do sell that house, refinance that house, then you will pay that debt off. But no, you don't necessarily have to pay it all at once.
It also says in there, if I'm not mistaken, and you certainly know this more than I, that there are no penalties and this does not affect your credit. Is that accurate?
That is very accurate. There are no late payments, no late fees or anything like that at all. And they do not report anything negative at all to your credit history. So if somebody's in a tight right now, if this layoffs or work slowdown or anything is slowing them down to where they are having difficulties, go ahead and take advantage of this. Don't wait to the last minute, because tens of thousands of people are doing it. So get ahead of the game. If you're thinking you're going to have trouble with that May mortgage payment, you need to be making phone calls right now to your service provider and talking to them about forbearance and making plans for that repayment and how you're going to do that in the future.
And I have one last question that's come up a couple times. So when it says that you have, my dogs just came in.
I saw that.
That you can skip your mortgage payment, but what happens with the interest on that mortgage? Are you still responsible for paying the interest, or are you still responsible? You know how the mortgage payment sometimes has your insurance wrapped up, your mortgage payment, your interest or PMI. So
let's just think about the payment you have now. If your payment that you have now includes escrow funds for your taxes and your insurance, then that's the same payment that's going to be skipped, that's going to go under the forbearance. So even though you take advantage, let's say you need it for a long time. Let's say your company closed because of this, and you need 6, 12 months of this. Well, taxes are definitely going to come due at the end of this year.
Right.
If your taxes were included in that payment, then the mortgage company will make sure you get those paid. It's part of the
Wow.
forbearance. Okay. This amount that is deferred cannot be charged extra interest. Okay. So if you deferred $5,000 worth of mortgage payment, they're not going to charge you interest on that $5,000. It's just simply that payment's put away, put aside until you do work out a repayment schedule with it. So it's a good thing. It really is.
Okay. Well, do we have your permission? Anybody watching this video that may have individual situations or questions that, we didn't address here, can they reach out to you for some more information?
They are more than welcome to call me. They are more than welcome to call me. I mean, I realize it's not a refinance or a purchase or anything we're doing now. It's just, helping you to help yourself. And so you're more than welcome to give me a call and we'll talk about it and see what I can do to help.
Fantastic. Well, thank you for your time today, Rodney. And
I appreciate it.
Today, stay safe, stay well.
Yes.
And, as they say, we're together even though we're apart, right?
Absolutely.
All right.
Thank you so much. I appreciate it.
All right. Have a good day. Bye-bye.
Bye-bye.